Hi, everybody. Welcome to Big Business This Week. I'm Dave Briggs from the floor of the New York Stock Exchange. Will Travis Kelce propose to Taylor Swift on Super Bowl Sunday? That is actually among the many Super Bowl bets you can make online. We'll have the CEO of BETMGM in just a bit. But first, is the trade war with two of our three biggest trading partners off before it was ever actually on? Or is it merely delayed? And what's the impact on American businesses and consumers? Citigroup Chief Global Economist Nathan Sheets here to discuss with us. Good to see you, sir. So let's start with those 25% tariffs on Mexico and Canada, delayed by 30 days. Who blinked first? What, if anything, did the U.S. actually gain in the process?
Yeah, I think this is a question a lot of investors and a lot of companies are asking themselves. From my perspective, these tariffs that were threatened on Mexico and Canada were very much, from the conception, a negotiation device. And I don't think President Trump has any particular desire to put tariffs on Mexico and Canada. But I think what he's looking for is support and help with the border and securing the border. And these are negotiation chip. So when they were threatened, Mexico and Canada responded and promised to do things to help secure the border, and Trump pulled back. That was very much the model that I had in mind for these tariffs with these trading partners.
In some cases, we say moving the goalposts, but I think the president's actually changing sports because now it seems to be a fentanyl discussion, and there's only some 40 pounds seized at the northern border all year last year, so it's hard to keep up with. What happens, do you think, and do the markets think, in 30 days?
You know, this is an excellent point. I think a lot of folks, and I'm included, I understand what he's trying to do vis-a-vis Mexico, where there are issues that have been very much front and center in the political debate about the border, kind of why Canada as well, and why Canada is part of this. That's a harder kind of narrative to answer. But I think bottom line here, it underscores a broader point about President Trump's operating approaches, and that is most policymakers seek to be transparent in what they say. They try to say what their policy is going to be and then implement it. And President Trump operates in a world of ambiguity. And I think he views it as constructive ambiguity, but there's a debate as to how constructive all this uncertainty and ambiguity really is.
Yeah, and when you talk to business leaders, all I hear and have heard for the last several decades is we need certainty. That's the word they need. They need to know what's going to happen in not just 6 months, in 10 years. So how are they impacted by what is going on, this type of environment?
This is such a big point. When I think about the challenges for the economy associated with tariffs and threats of tariffs, I've got to think about, well, what happens if this tariff is actually implemented? But in addition, the possibility that tariffs may be implemented introduces, and the best word that I can think of is a hesitancy in the business community. They want to know what their operating environment is going to look like and feel like. And if they don't know, they're just going to wait. And as businesses wait, that means less investment, less business expansion, less hiring. And the uncertainty that this creates generates meaningful headwinds and slowing for the economy. So I think this is a big risk for the economic outlook. And it's something that I'm more and more focused on as I think about the trajectory of trade policy.
So Nathan, while you and the markets and most of us think they won't be implicated in 30 days, if they do, what industries will be impacted the most when it comes to Canada and Mexico?
You know, I think front and center, the industry that's really going to be walloped is the U.S. auto sector. The reality is that U.S. automakers in the cars that they produce incorporate a significant amount of value added from Mexico and Canada. And it really is an integrated production approach across the border. And if you were to put these sizable tariffs on, this would raise the cost structure for that industry significantly. But the sectoral challenges, certainly also the agriculture sector would feel this, and it would be painful. Manufacturing more broadly, I think it really is the full gamut of U.S. industries. This, as you said, these are two of our very largest trading partners. And this would be a large tariff. 25% is a very sizable tariff.
And these, of course, are allies as well. And we saw GM get walloped earlier in the week before leveling out a little bit. All right, let's move to the 10% tariffs on Chinese goods. They have taken effect. When and where will consumers and businesses feel it?
So this aspect of its tariff policies is less surprising. I think pretty much any analyst you talked to as Trump was being sworn in would have said that there are likely to be tariffs on China. Many folks thought they'd even be larger than this, and there may be more to come. But I think the reality here is, you ask, where are we going to feel it? Where are we going to see it? That Chinese goods coming into the United States are going to be more expensive. And firms are going to feel that in that they have inputs that they import from China in their production process. And that's going to mean production costs rise for many firms, particularly in the manufacturing sector. This is also, it's across the board. It's also going to apply to consumer goods that we purchase and a variety of other products. So we will see a signature in U.S. prices associated with this. My sense is it's not going to be a watershed move, that 10% on China, and China's roughly 15% of U.S. imports now. It's much lower than it was 7 or 8 years ago, partially as the effect of the previous round of tariffs. But people who are watching these data will see effects.
In particular, keep your eye on electronics, as inflation could yet again fire back up, and that's why you're seeing the Fed hold firm where they are. How do you expect China to respond? Thus far, it appears to be pretty mild.
I think the challenge that China faces, and candidly, it's a problem for many other countries, is that the U.S. imports a lot more than we export. So as the U.S. puts tariffs on imports from foreign countries, it's hard for those foreign countries to respond precisely in similar magnitude. There just isn't as much to tariff. And a lot of the stuff they import from the United States is stuff that they really need. And they don't want to push up prices. So candidly, if you ask me kind of what the best response is to these tariffs for other countries, my view, and this is broadly consistent with the macro models, is that central banks around the world need to cut policy rates. And tariffs are headwinds for their economy, and they should offset that with more stimulative, more supportive monetary policies. That's the best response.
Citigroup Chief Global Economist Nathan Sheets, real pleasure having you here, sir. Thank you so much. Coming up, the Super Bowl is also the biggest day of the year for sports gambling. How much will be bet, and how you can bet on Taylor Swift. Next. Welcome back to Big Business This Week. The Super Bowl is not just football's biggest day, it's the Super Bowl of betting as well. BetMGM CEO Adam Greenblatt joined me to talk about the rise of sports betting, iGaming, and of course, all the major wagers for Super Bowl 59. Take a look. The biggest sports betting day of the year is Sunday, and a record $1.39 billion is expected to be legally wagered on the Chiefs and Eagles, according to the American Gaming Association. Let's talk Super Bowl betting with BetMGM CEO Adam Greenblatt with us from New York. Adam, good to see you. That number sounds huge to a lot of people. For those of us that cover the industry, it sounded shockingly small because usually they factor in illegal and unregulated bets. Last year was expected to be $23 billion. Why do you think the AGA made that shift, and does it hamper the buzz surrounding Super Bowl betting?
Look, I think the AGA made the shift because the regulated market is where we should be focused. And frankly, I take the contrary position. I think it's hard to believe the industry in the US is just 5 years old, and the sheer scale and customer interest just has been unprecedented. In absolute terms, the US is now the biggest regulated sports betting and iGaming market in the world, and that's the small number that you were referring to, and so it's exciting, and actually it's exciting really relative to where we started. The size of the market is expected to be even bigger than we thought at the outset, and it's not just sports betting. iGaming, the outlook for iGaming is also really positive. This is casino and poker and slots. There are 9 states in the US that have introduced legislation this year to permit iGaming. And frankly, this is one of BetMGM's superpowers. We're a leader with 22% market share. So we're excited about the prospects of the regulated industry. But as you rightly refer to in your question, one of our opportunities and challenges is to ensure that all play is onshore regulated play. It means that they're tax dollars for states. It means that players are looked after.
You referred to 2024 with investors on a call as a year of investment and rebuilding of momentum. Losses increased to $244 million. Betting has never been bigger, more widespread. You just called it unprecedented. So with that being said, how difficult is the profit story in this industry? What's the biggest headwind?
It's a very interesting question, and an important question, because one of the things that we have seen, to your point, one of the things that we've seen over the last 12 to 18 months is that many of the smaller operators have closed shop. So the cost and complexity of participating, stitching together all of these different states with different rules and regulations in a high tax environment, where the costs of compliance are also are substantial, really it becomes overwhelming unless you have efficiencies of scale, unless you're big enough to be able to afford to and able to absorb all of those costs. Now, the good news is, thanks to the investments we've made in 2024, BetMGM is on the right side of that scale requirement. So BetMGM is now has generated over $2.1 billion of revenue in 2024. Our outlook for 2025 says we're going to put on an additional $350 million of revenue and increase profits by at least $250 million, or around $250 million year on year. So we're making tremendous progress. And one of the beautiful things about this business model is that the next customer, the gross profit margin, and I'm sorry if this is too in the weeds, but the gross profit margin from the marginal customer is about 50%. So as you scale, the drop through of the next customer, as we get bigger, the conversion from revenue into profit of the next customer is very high margin. And so you need to be big to get there. But when you're big and grow, then the economics become pretty exciting.
One of the headwinds, of course, is state taxes. And on that note, Ohio Governor Mike DeWine wants to double the state tax on sports betting to 40% to fund stadiums and youth sports. That's from 10% 2 years ago. New York, where I sit today, is currently 51%. How big a headwind is that for you?
At the moment it's being proposed. We are, as an industry, trying to engage positively with lawmakers to really argue the points, the reality, which is raising taxes on operators will impact the growth of the industry and negatively impact regulated consumers. Consumers who are doing the right thing are made worse off as a result of these kind of tax hikes. And it's not like we're operating in splendid isolation. As we started the call, we're up against the illegal market where taxes are not a thing, right? So the extent to which you raise taxes becomes really a headwind for operators to make profits. But profits are at the end. It's to invest in product, invest in marketing, invest in players. So there is certainly a threshold above which tax becomes really a drag to a thriving competitive market in a state. And I'll say one more thing, back to the iGaming point that I made.
Yeah.
If raising tax revenues for, to fund state budgets is the objective, by far and away, the most effective and impactful way to do that is to legislate iGaming, as multi-state providers have proven.
Interesting. There's also the question of unconventional, let's call it, competition. Trading platform Robinhood actually raised a lot of eyebrows this week, getting in the betting space in a matter of speaking regarding the Super Bowl. It was scrapped after pushback from regulators. Have we heard the last of that? How much competition are Kelce and Polymarket, and would BetMGM ever get into their space, which is election betting, etc.?
You're right up to speed with the latest on the up and down of developments. Look, we haven't heard the last of it. I'm sure that there will be attempts to resurrect this initiative in some form. Why? Because players like it. And really, from our perspective, all we want to see is a level playing field that we can compete on. And so, if, for example, election betting is permissible under federal regulations, we think that there's no reason that it should not be permissible under our gaming regulations, because the underpinning is ensuring the integrity of the wager itself. And so, we have real provenance for this kind of betting through one of our shareholders, Entain, which is one of the leading election betting and novelty type bets in Europe, novelty type betting operators in Europe. And so we don't have any impediment to offering the product apart from that which is regulatory. So I don't think we've heard the last of it, and certainly we're paying close attention, and the extent to which it's allowed, we will be there.
Very interesting. All right, so let's dig into the Super Bowl now. What typically are the most common, most popular Super Bowl bets? Has that at all changed this year?
Well, as has been the pattern for many, many years, in fact, decades and decades, the six-pack is where the majority of action lives. Now, what that means is, it's the regular bettings on one team or the other, on the money line, who's going to win the game, total points scored in the game above or below, and the spread. By how many points does the team win or lose? That's where the majority of bets are. But things are changing. We at BetMGM will have over 1,500 different ways to bet the game come Sunday. I mean, that's just a huge volume of different things. And that's really because we're responding to our players telling us by their actions, through their actions, that there are pockets of interest, even at the margin. Now, in terms of betting volume, we are seeing this already betting volume build. Although we do get about, at least certainly last year, we had about 60% of betting volume on the day of the Super Bowl itself. Betting action so far, we've seen early betting on the Chiefs and the over. More than it started out at the game line was 47 points. And we saw a lot of bets on the over. So now the game line has moved out to 48.5. Other area of interest, certainly at BetMGM, the big year-on-year moves have been in the area of touchdown markets. So that's first touchdown, anytime touchdowns made, and unsurprisingly for the big game, Saquon Barkley has seen the most bets on a varied range of those kinds of markets. But within the range of 1,500. There are novelty bets, from coin toss to length of the national anthem. We've even got one in Ontario where the bet is, will Travis Kelce propose to Taylor Swift? Yeah, something for everyone.
Okay, will he? Where would you bet on that? Is Travis Kelce going to propose? That's really the big question.
So I've come to learn that I need to stay in my lane on things that I have things that I'm a romantic at the end of it, so I would love to see a fairy tale ending. But I've got no inside scoop. The money says probably not, by the way, for what it's worth.
Really enjoyed the conversation. BetMGM CEO Adam Greenblatt. Enjoy the Super Bowl, sir. Thanks so much.
Thank you for having me.
Our thanks to BetMGM CEO Adam Greenblatt. Coming up, the business news you may have missed this week, including which industry may benefit from tariffs. Stay with us. Welcome back to Big Business This Week. Let's welcome in our friend Peter Green for the business news you may have missed this week. Peter, good to see you. We were talking about tariffs earlier in the program, but there may be one industry you say that actually benefits here. Who and why?
So scrap metal dealers, of all things. One of the big issues for steel mills in this country is getting a source of high quality steel. And a lot of that, the best source of that stuff has been scrap cars that go into these chippers that cut them into micromillimeter sized pieces, and then they're fed into steel mills and turned into rolled steel to make new cars again. For a long time, there'd been huge demand outside the country for this stuff. But with the tariffs, steel makers are finding that it's actually cheaper to buy domestic scrap. And the U.S. has an extraordinarily large supply of domestic scrap, so much that we probably never need to import it again. So steel makers are willing to pay a little more for domestic scrap. Scrap dealers are willing to pay a little more for scrap that they buy from construction companies, municipalities, Navy yards, whoever it is. And it looks like a pretty good business for everyone involved, though I'm not sure what that does to the end product steel and the cars that are made out of them. Those may shoot up in price. But these scrap dealers are sitting happy right now.
All right, so Peter, what's your best bet on the tariffs on Canada and Mexico? 25% delayed 30 days. Ultimately, will this just prove a bluff?
I mean, most of what Donald Trump does in this kind of situation is, creates a storm, says he's resolved it, declares victory, and it goes away. Sure, we may keep 10% tariffs on China. There may actually be constituencies that want that, and I'm sure those tariffs will get chipped away when people who need certain components say that those components are getting too expensive. But one of the things that happened the last time Trump put tariffs on China and Biden continued them is that a lot of suppliers of things like auto parts moved production from China to more politically friendly countries in Asia, like Vietnam and Thailand. So I think we're going to see this as a huge bluff. Not a whole lot happens, but a huge victory is declared. Like with Mexico, they already have 15,000 troops at the border. They didn't really add 10,000 more. But Trump declares victory and, moves on, and the economy moves on and eventually absorbs most of this, unless, of course, you're buying eggs.
Yeah, just a couple of weeks in, and the playbook looks crystal clear at this point. Good stuff. Thank you. Our thanks to Peter Green. Make sure you go to our newsletter for even more stories by going to cheddar.com/BBTW. Don't go away. More Cheddar up next.